Hello and welcome to Pro Trader Strategies Market Commentary for Monday, September the 11th. It's quite a sad day for anybody who was around for the atrocities we saw on September 11th. And hearts and prayers go out to all those people that were affected by that. I actually have some very close friends that were in that building that day, and it was a very sad day. But anyway, welcome to Pro Trader Strategies. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Usually talk about economic data across the pond, and here in the United States, nothing really to see there. A very quiet day for economic data, nothing important necessarily. But on to the overall markets, we have crude oil moving higher today by about 56 cents, right there at the point of control for the most part, for the most time that has been spent. Doesn't mean that necessarily that there's been transactions of contracts at that level. That's a little bit higher, closer to the $49.23 area, so almost $1.20 higher than we currently are. But crude oil moving higher today, finding support at that 50 Fibonacci level. So it wants to kind of stay in this area where it's very comfortable, and you could easily see it moving higher based on all of the disruption we're going to be seeing from all these hurricanes. I thought we'd see that a little bit sooner than we are now, but it could just be baked into the cake at this point. On to gold futures. Gold's coming off quite a bit today as there is a huge rush into the equities. A lot of euphoria in and around E-mini S&Ps kind of looking to print all-time historical highs, but the overall market's moving money into equities across the board, which is going to affect the gold futures. Plus the debt ceiling was raised, and that was one of those fear indicators for gold, but I think it's kind of run out of steam to the upside, and therefore hopefully comes down a little bit further for my IRA's sake and GLD, but in my margin account it's looking pretty good because GLD's come back and my short calls are out of the money again. And with just a few days to go, I should start seeing rapid theta decay coming out of those, and the gamma affecting that as well. Bond futures down just over a point, again with that debt ceiling raised. A lot of that fear indication, or fear moving into the bonds, has kind of subsided, and I think we'll start seeing the bonds lose a little bit of momentum to the upside at the same pace that we see gold losing momentum. And down a point on the day is a pretty nice move for the bonds to the downside. On to the VIX, it's down also because as equities rise, usually the VIX will have a tendency to come off quite a bit, and that's what we're seeing right now. Still above 10, which is decent. I mean, as we've been seeing it well into the 9s and things of that nature. 10's kind of right where the average is for the most part, but we're seeing the VIX come off quite a bit, which means volatility coming out of a lot of stocks, as we see, for instance, like the Dow Jones up 262 points. That is definitely going to affect volatility. You're going to see volatility come in when we start seeing these nice rallies in equities. And then on to the NASDAQ, it's up 64 points, almost 65 points right now, and it really is going to be eyeballing this 6,000 number very shortly, probably within the week, I'm guessing. And then the E-mini S&P is up 25 points on the day, and again, right at the value area high, should act as a bit of resistance, but it's going to be looking to at least print this number probably this week. I could easily see that happening within the next couple of days or so. And then on to the daily chart of the mini S&Ps. This is a breakdown on a 30-minute segment with these each individual blue areas that are kind of highlighted as the day. This also includes the overnight session, but you can see the overnight session printed and gapped a little bit to the upside. Now we printed in the day we printed within the day session this point of control, which was a virgin point of control, but now it's printed, so that target kind of comes off the list in a sense. But you can see as soon as the market opened up, the market just blasted off to the upside, almost unabated rally to the upside. So if you are short, they are scrambling to get out of just about everything. As I've done with a lot of my deltas, I talked about this last week. I was getting overall negative short deltas. There's a couple trades on that I didn't really necessarily want to keep on going forward. This is a trade that I took off today in both my IRA and in my margin account. And if you remember, I had on the October, I was short the, in the October I was long the 115 puts and then short the 110 puts as a long put spread, following all my rules in and around that particular strategy. And I originally paid $1.90 for that, and I got out for 94 cents on both my, actually got out of my margin account at 93 cents and in my IRA for 94 cents. So pulled the ripcord on both of those. I got in for, I paid $1.90 for both my IRA and my margin account, but now I'm out of those. I talked about this also, if it was going to go above this, these dojis here and print newer highs, I was just going to get out of it. It was a broken pattern and not looking to stay in that any longer. So decided to get out while the opportunity to still have some value left in that strategy. 94 cents, lost about $1 on it. All right, on to MasterCard. This is another one that I took off as well. I decided to get out of this one, and just because it broke to the upside, I got in early looking at this, looking like it was kind of gapping out and may have been a little bit overdone to the upside. Got in early and said if we printed above this doji here, I was getting out, so I followed along with that. It's just a broken pattern as well. And if you remember, I got into this trade with a long put spread as well, and I had done the October, bought the 140 puts and then sold the 135 puts. I paid $2.33 for that, got out for $1.27, so lost money on that one as well. Just nothing you can really do on these long put spreads or long call spreads, if you will, when they go against you. There's just not a real good way to manage it other than to just wait for the time to elapse. But because I did these as technical setups, and those technical analysis setups broke down, I pulled the ripcord on them. So out of both of those. And then I forgot to talk about one of these. This was a trade that I did on, got out of UPS today as well, and in UPS, I took this trade off, and I had on, I think I already talked about the UPS trade breaking out and above that. So that trade is also taken off with UPS. Let's make sure. In October, I had bought the 115 puts and then sold the 110 puts originally for $1.90. Got out of both of those in my margin and in my trading account. The one thing that I did, I know I talked about that now. The one thing that I did add to my portfolio, and this was on Friday, it has high implied volatility. This trade, when I saw this setup down here, looks like it was bottoming out quite nicely. Added some short puts in there, which is bullish. When you're selling negative deltas, that is a bullish trade. And got into this trade for AT&T October, sold the October 34 puts for 42 cents. So still have that trade on. It's not really confirmed to the upside, but I believe that looks like it's a pretty nice down move. They beat earnings last time, and the sell-off rolling over should be over and done with. I believe, at least with the 52-week lows being 35. I think that looks like a nice bottom in there. I actually looked to add some more to that trade to my IRA, but it just was not setting up good enough anymore with that move higher to put that in my IRA. I'd have to be really close to the 35 puts, and I just don't want to kind of risk that. So didn't add that to my IRA, just put that in my margin account on Friday. I kind of talked about that trade also in the webinar that I did on Friday, which was on the short straddle. So that's a great strategy for collecting premium, but you can set that up in the wrong environment and it can be really detrimental to your portfolio. So I talk about all the rules around that. Yeah, I know you can go out and read it online, how you sell the at the monies. That's pretty basic, but those people are not going to tell you the right environment and how to set that up to be delta neutral if you're just reading it online. And those are some pretty important aspects to this in order to not have a directional assumption with the straddle. So go to protraderstrategies.com, check out that video. It's a really good one. Now we're going to be moving on to the strangle, which the strangle is one of my favorite strategies. As you notice, I probably talk about the strangles quite often in the daily market commentaries. So go and check out all my rules for that. You can sign up at protraderstrategies.com for that too as well. All right, that's all I got for you guys. Try and enjoy the day, despite the fact that there is a black cloud over this day, but it's a good day to remember those who have really fought for our country and were involved in some of that tragedy. All right, so if you can't take that, take it easy.